If you found this video helpful, like, comment, and subscribe for more content. Before we dive in, don't forget to like, comment, and subscribe for more investing tips. What if I told you that the $10 bill in your wallet holds a secret? It's not just enough for a couple of fancy coffees or a fast food meal. It's actually the key to unlocking a future you might have thought was only for the super rich. We're talking about building real, long-term wealth. It sounds completely crazy, I know. The world of investing, with its confusing charts and Wall Street jargon, seems designed to keep regular people out. But that's all changing. The secret is that you don't need a mountain of cash to begin your journey. All you need is a little bit of money, a smartphone, the decision to start today. This isn't a get-rich-quick scheme. It's a get-rich-smart plan. If you leave that $10 in a savings account, it's losing value over time. Thanks to something called inflation, your $10 will buy less next year. But what if you could put that money to work? What if you could make it grow faster than inflation? That's exactly what investing does. It turns your money from a lazy couch potato into an active employee that works around the clock. It's the single biggest difference between just getting by and building a secure financial future. Many believe you need thousands. Old guys on a trading floor? Outdated. Today, technology has smashed those barriers. You can start with literally just a few dollars. This guide is going to show you exactly how. We'll break it down simply. No complex math, no confusing financial vocabulary. Just a straightforward roadmap showing you how to take a small amount, like $10, and plant the seeds of your future wealth. The goal here isn't to turn you into a day trading genius. Forget that. We'll show you a reliable, proven path anyone can follow. It's about making smart, consistent choices over time. Every dollar you invest is a vote for the future you want to build. Grab that $10 bill, or the idea of it, and get ready. We're about to demystify investing so your money works for you. Your journey to becoming a confident investor starts right now. Let's get this out of the way first. What exactly is a stock? It sounds complicated, but the idea is actually super simple. Imagine your favorite company, Apple, the company that makes your iPhone. Starbucks, where you get your morning coffee. These massive companies are owned by millions of people. A stock is a tiny piece of ownership in one of these companies. When you buy a stock, you are literally buying a small slice of that business. It's like owning one tiny brick in a giant skyscraper. You're officially part of the building. Why would you want to own a tiny piece of a company? Because when the company does well, you do well. If profits rise, your slice can become more valuable. You get to be on the inside, sharing in the profits. Of course, the opposite can happen. If a company does poorly, loses money, or makes a bad product, its value can fall. Your stock can go down too. Key point: over the long term, the stock market as a whole has tended to rise. Spread your money across many companies to reduce risk and ride that long-term trend. Don't bet it all on one horse. You buy hoping the company becomes more valuable over time. This is called capital appreciation. Some companies pay shareholders directly through dividends. Stocks give your money a chance to grow faster than a bank account. You're not just saving, you're building ownership in the economy. All right, let's talk about the most powerful secret weapon in all of investing. It's not about picking the perfect stock. It's not about having a ton of money. It's something much simpler: time. The earlier you start investing, even with a tiny amount, the more powerful your money becomes. Thanks to a magical concept called compound interest, your earnings generate their own earnings. Your money starts making money. That new money makes even more money. A snowball that can become huge over decades. Let's imagine two friends, Sarah and Tom. Sarah starts investing just $10 a week at age 20. Tom waits until he's 30. He puts in $20 a week to catch up. By 60, it's Sarah. By a landslide. Those 10 extra years let compounding work its magic. Starting early matters more than starting big. A little money with lots of time can beat a lot with little time. The perfect time to start was yesterday. The next best time is right now. Every day you wait, you lose compounding. Even spare change can be smart. Starting small isn't a disadvantage. Starting early is your superpower. So you're convinced. You're ready to turn your $10 into a wealth-building machine. But how exactly? Luckily, technology has made it incredibly easy. Here are 3 of the best ways for a beginner to start with very little money. The first, and most popular, is through modern investing apps. Robinhood, Fidelity, Charles Schwab. These apps are as easy to use as social media. Open an account in minutes. Connect your bank. Start with as little as $1. These apps have a killer feature called fractional shares, a total game changer. If a stock costs $200, your $10 buys 5% of a share. If it rises 10%, your 10 becomes 11. Another brilliant strategy is an exchange-traded fund, an ETF. It's a big basket of hundreds or thousands of stocks. An S&P 500 ETF gives you a tiny piece of the 500 largest U.S. companies. Instant diversification. It lowers risk. A few losers get balanced by hundreds of winners. Perfect, set it and forget it. Finally, a dividend reinvestment plan. DRIP. Dividends automatically buy more shares, creating a compounding loop. Let's make this real. Using fractional shares, you invest $10 and own 0.05 shares of global tech. You are officially a stock market investor. Every single week, find another $10. Maybe skip one expensive coffee or pack lunch once. After a month, $40. After a year, $520. And if the market averages 10%, about $572. You've made $52 without extra work. Your money did the work for you. Keep investing $10 weekly into a broad market ETF. After 10 years, you contribute about $5,200, but compounding can take it closer to $9,000. Roughly $3,800 is growth. Over 30 years, $15,600 invested can grow to over $100,000 at a 10% average annual return. A small, consistent habit becomes a 6-figure sum. This is how normal people build wealth. It's not a lucky pick or a secret formula. It's consistency, patience, and letting compounding do its job. As you start your investing journey, it's just as important to know what not to do. The first and biggest mistake is putting all your eggs in one basket. A hot tip or viral post is tempting, but that's not investing. It's gambling. True investing is diversification, spread across many companies and industries. Another mistake is trying to time the market. Even pros can't do it consistently. You'll sell low and buy high. The winning move is time in the market. Keep investing week after week, month after month, up or down. The market doesn't go straight up. There are good years and bad years. That's normal. When downturns hit, don't panic sell. If you believe in your strategy, dips are discounts. Don't get sidetracked by fees. A 1% annual fee can eat a third of gains over decades. Choose low-expense ETFs. We've demystified stocks, shown the power of starting early, and laid out 3 simple ways to invest your first $10. Now there's only one thing left to do. You have to take action. The journey of 1,000 miles begins with a single step. Your journey begins with your first investment. Don't wait for the perfect moment, or more money, or more books. The perfect moment is an illusion. Start now with what you have. First, choose a beginner-friendly investing app and download it. Second, connect your bank and transfer that first $10. Third, make your first investment. A great starting point is a low-cost broad market ETF, like one tracking the S&P 500. Buy $10 worth. Set up an automatic transfer. Even $5 or $10 a week builds the habit. You're moving from consumer to owner, putting money to work so one day you won't have to work so hard for money. Take that first step. Your future is waiting, and your future self will thank you. Think about it. In 5 or 10 years, you can look back and be glad you started today. The choice is yours. Let your decision be one of action and empowerment. If you found this video helpful, like, comment, and subscribe for more content.